What's the biggest myth in investing? It's the lie that we all tell ourselves. I'm a long-term investor. Don't believe me? Let's go for a walk and talk about it. You know, I feel like this is a scene out of the movie A Few Good Men. And I'm Jack Nicholson and saying, you can't handle the truth. But you know, the truth is important because if we know the truth, we can prepare for it and we can protect ourselves from it. So I've been doing this for 20 years. I've worked with hundreds of families. And I can tell you the vast majority of investors, including some professional investors that have been wildly successful, they're really long-term bull market investors, and they're buy the dip on 10 and 20% corrections. Boy, we all feel smart when we're like, oh, I'm not afraid of the stock market volatility. The market was down and I bought more. I can't tell you how many times I've heard that. But when the chips are down, and it really makes a difference, and it's likely going to impact the cash flows in your retirement. When there's a 50 or 60% drop, like in the financial crisis, or the 5 weeks, in a little over 4 weeks, the COVID drop of over 30% on the Dow Jones. That's when the chips are down. That's when it matters the most. And boy, it's so hard for people to stay the course. People that have said, boy, I really wish the market would correct. I'd love for the market to correct. I'm going to back up the truck and I'm going to buy a lot of stock when that happens. You know, super hard to do that, even when you're in the height of your earnings lifetime and you're making good money and you can make up for it. Boy, when you've lost 10 years of progress in a few short months and you're looking back and say, there were all these warning signs. I mean, think about COVID, right? I mean, COVID broke out in China and we saw it wave across Europe and we saw it go through other countries. And even myself, until the very end, I thought, you know, they've always contained it in the past. They're going to contain it. They're going to contain it. And you know what? They didn't. And that's why there was such a drop so quickly. And one day, I believe it was March 16th, the market was down 12% in one day. I mean, that's enormous. That you feel that pain. Let's say you've got $1 million investment portfolio. You're down $120,000. And it's just human nature to think to yourself and say, how long did it take me to save $120,000? You know, if you're saving $20,000 a year, which you're doing well if you're doing that, that's 6 years of saving. And the challenge is, the older we get and the fewer working years we have in front of us, the scarier all of this becomes. So the myth is that we're long-term investors. The reality is most of us, the vast majority of us, are long-term bull, and we like it when the market's going from lower left to upper right. It's going up, and there's a couple corrections along the way. But boy, when there's a pullback like the dot-com bubble bust, where it was 3 years of negative returns, that's a long time to wait. And it's really hard to stay the course. And I want to give you an example, probably the most famous investor in U.S. history. Any guesses? Of course, it's Warren Buffett, right? Think about during COVID. You know, what happened? I've got some notes and some data here I want. What happened during COVID? You know, Mr. Buffett, who I'm a fan of, and I met him, and I'm gonna tie in this video to a question that one of my classmates in business school asked Warren Buffett. I got to ask him a question earlier as well, and if you want to see that video, you can see the link up here for that. But for today, you know, Buffett during COVID, actually before COVID in 2016, he started buying up airline companies, and Berkshire Hathaway owned 9% to 11% of American Airlines, Delta Airlines, United, and Southwest. It was a significant holding for Berkshire Hathaway. It was $7 to $8 billion stake before the correction. And then when COVID happened, I believe it was in May, so either April or May of COVID, you know, Warren Buffett said, you know what, I made a mistake. We're going to sell, you know. And it's not just COVID related. First off, he did say it's going to take years for the airlines to recover from COVID. But he also was later asked, you know, a year after he had sold and the stocks had rebounded 50, 60, 70%. He was asked, was that a mistake that you sold the airline stocks? And Warren said, you know, there's these long-term cyclical headwinds for the airline industry. There's overcapacity. Debt is too easy, right? You can finance jets. It's so easy to add capacity that all those headwinds exist. And you know what? That sounded great in an interview. And again, I'm a fan of his. I'm just cautioning you because if Warren Buffett can do this, we all can do it. You know, the truth is, that answer that Buffett gave in that interview, that there's these cyclical, there's these secular headwinds in the industry, that is true. But you know what? It was also true in 2016 when he loaded up his truck and bought those positions. So if Warren Buffett can be subject to being scared out of the market, we all can be, right? And what happens is, what information are we using? And I think this is super important. What information are you going to use to say, if this stock drops by 20, 30, 50%, what information are you going to look at to say, is the market wrong or am I wrong? Should I sell my stocks or should I buy more because it's on sale now? What information are you going to look at? Because you can't just look at the stock price, right? Which in this case, I think, yes, there were, you know, COVID, of course, nobody was traveling. I did do a couple trips during COVID and it was bizarre. The airports were completely empty. But the point I want to make is, what information are you going to use to tell yourself, was I wrong? Or are you going to say, you know what, the market's right and I'm wrong? And that's why people blow out, is because they think that the market was right and they were wrong. And it's just too easy to say, you know, it's very painful. I'm going to cut my losses when I can. I mean, if Warren Buffett thought that American, United, Southwest, and Delta were going to double in value in 12 months, there's no way he would have sold those positions, right? He was convinced that the market was right and he was wrong. And if somebody as experienced and disciplined as Warren Buffett can do that, I just caution you, it can happen to you as well. And remember, this is a hobby for Warren Buffett, right? This is his passion. He doesn't need this money to retire on. He is, you know, a billion times, not a billion, but he's 1,000 times, he has 1,000 times more money than what he needs to retire. And so if Warren can be subject to it, you can be subject to it as well. And as the older we get, the stronger those forces are, the drive, the feeling like I have to react, I have to do something. And if you blow out of the market when it's down 50 or 60%, first off, it's going to be very hard to ever get back in, right? In the financial crisis, if you blew out near the lows in March of 2009, boy, it's really hard after the markets come back. If you didn't like it when it was at, the Dow Jones was at 6,700, you know, at 9,000, you really didn't like it. It was 50% more than when you blew out. And you were constantly waiting for that next shoe to fall so you could get back in. And there are people, you know, I met people 3 years later. They weren't my clients. They were somebody else's clients, but they came to me 3 years later, or more likely they were do-it-yourselfers. They came to me 3 years later and they were still out of the market. 4 years later, still out of the market. And that has a material impact. So this is the biggest negative and the biggest myth in investing. And I just caution you to take it to heart. And what can you do to protect yourself? What can you do to say, you know what, I don't want to be subject to this. By the way, if you're wondering what this sound is here, there's this beautiful stream right behind me. So it's the sound of a bubbling brook. So, and I'm on this bridge here. So what can you do to protect yourself from this? You know, I'm biased, but I think the best thing you can do is you can have somebody that you trust, that you have a relationship with, that knows who you are and is a trusted confidant for you. And they are a river guide. They're helping you through it. And that's what a great financial advisor does, is they protect you from these scary times by the work that they had done 3, 4, 5 years earlier. They recognize that the scariness of events like this amplified. They can be an order of magnitude higher once you've retired. So just because you haven't blown out of the market in the past, this is when it matters the most now that you're retired. that you can stay the course. So what can they do to protect you? They can get that asset allocation right. They can warn you that it's going to feel a lot worse now that you're retired than it ever has before. It's going to be harder to stay the course. And they can design an investment portfolio for that. They can, every time you come in and see them, ironically in 2019 when the market had a really strong year, I told my clients, any market that can go up by this much can also go down by this much. And unfortunately, that's exactly what happened. I didn't see it coming. But what I did do was in 2019, when the returns were strong, I shared with them, this is a good time for me to remind you that the market giveth and the market taketh away. So a great financial advisor protects you years before things are scary, and then they're there as a river guide to help you stay the course when it matters the most. As you know, I'm a big fan of fee-only financial advisors. They're fiduciaries to you 100% of the time. You want to know when times are scary and you're getting a call from your financial advisor, that they're calling because they care, that they're calling because they have your best interest in mind. And if you're a fiduciary, fee-only financial advisors have committed themselves to being a fiduciary, to putting their clients' interest before their own interest, before the interest of the firm, just like a doctor, just like a lawyer, or just like an accountant. And you don't want any seeds of doubt in your mind when things are scary. So that's my biggest advice of what you can do. Advisors aren't for everybody. I'm obviously biased. But boy, one mistake can really cost you. And so I hope my channel is helpful. I hope this video is helpful. If it is, do me a favor, give me a thumbs up. It does help other people find the channel. If you haven't subscribed yet, think about subscribing. I'd love to have you as a part of my community, and leave me a comment. I love reading the comments. They're one of the currencies for why I'm doing this YouTube channel. So again, I hope it was helpful. I'm Azul, encouraging you to take full advantage of the youth of your senior years. Remember, we're only young once. Let's live our lives to the fullest. Thanks for watching. Bye-bye.